Video is on how to use forex calculators in to aid your trading, and then in order not for you to be cracking your head on how to your profit, your loss, or something. So I'm going to be going straight to Play Store as we've done in the previous video. So um but since I've downloaded, I will not need to download. I just need to show you the app itself. All right, so you search for the app, Forex calculator. All right, so this is the app, Forex calculators. This one here. So click on it to install it. Where are the reviews? You can see 100k plus downloads, and it has 4.4 plus reviews. That is around 88% positive comment. So you can see most of the apps I bring for you don't have low rating. That's to show you the quality of these apps in which I'm actually introducing to you guys, or providing you guys as tools to actually aid your trading. You get now. So well, that's it. So now I'm going to now be going to the app. All right, so I'm going to be going to the app now. I'm in the app, so you just open the app. I don't think you don't need to sign in or anything. Just open the app with your data. So now it says position size. It says position size, stop loss and take profits, margin, peak value, Fibonacci, pivot points. So what I basically use it for three stuffs, which is position size, stop loss and take profits, margin. I don't think I peak value. I don't think I need it for that because I know how to calculate that already. So now position size is for to actually know the amount you'll be using or risking on that trade. So let's go to know the amount you'll be risking, to know the possible risk you'll be taking, and what you actually need to make so amount of profit, so amount of loss. So let's get to it. So for instance now, definitely your currency will, if you have a naira account, I don't know if naira is here. If you have a naira account, okay, naira is not here. So USD, of course, most major brokers use USD account, and that's the advisable one. So let's say you have an account balance of maybe $100 now. You have an account balance of $100, and then you just want to risk $4 on that trade, maybe, or you want to risk $3 on that trade. You guess. So that's 3% of your account. I don't advise anything more than 5% of your account maximum. But if you are taking two trades, that means that you are going to have to share it 2.5, 2.5. If it is three trades, you are going to have to share it. But the thing is that, to be much more profitable, you can take higher risk, but I don't advise it. But you'll still be taught risk management. So let's say 3% of this thing. So let's say it's GPP USD. So let's say that if the current, most times we use limit orders because I told you how patience is important in this game. So most times we wait for price to come to where we want to either sell or buy. So let's say we want to, price is at 1.29944. Let's say we now assume that, let's wait till when price come to 1.3000 now. You get, and our stop loss is just 1 point maybe 2994. That's just 6 pips. You get. So we all know that GBP USD has 4 decimal places. Euro USD has 4 decimal places. AUD USD has 4. Japanese yen pairs has 2. Which other one again? Well, basically it's, so that's it. So gold has I think 1 or so. So That's basically, don't let me bother myself on that. So let's say this one is stop loss is 6 pips. I told you how important tight stop loss could be. So that's 6 pips. So what this means that my position size is 5,000. So with my this thing, I'll be buying 5,000 quantity of Euro USD. You can see that this 1.2994 is like 0.0006, which is not significant at all. So but with my position sizing, I'll be risking just $3 to actually purchase 5,000 quantity of GPP USD. So which is 5,000 quantity of GPP USD. So now after we've gotten this, we can see that okay, our stop loss is 6 pips, position size is 5,000, standard lot is okay, don't let me, standard lot 0.05, mini lot 0.5, micro, like that. So now we now go to stop loss and take profit. You can see that our entry price is 1.3000, while our stop loss price is 1.2994. So let's go to stop loss and take profit. So let's say our position sizing is 5,000. Then amount to risk is what? $3, just $3. So let's say we are now like, okay, our entry price is 1.3000, and our target price is, maybe since maybe we want to buy, or sorry, maybe we want to sell. You get, maybe we want to sell. Our target price, this thing is, it's going to come down. So we want to buy because my stop loss is below. So let's say we want to buy, let's say we want to buy to 1.3050 now. You get, so that's like, or let's say we want to buy to 1.3036. So we know that that's 1:5, 1 ratio, um sorry, let me use, okay, well, that's 1:6, because our stop loss is 6 pips, while our take profit is 36 pips. So that's 1:6. If you should divide it, so you actually be risking 1% to make 6%. You'll be risking 1 to make 6. So now let's say we now buy, so 5,000, so that's it. So let's now calculate it. So you can see now, I already told you risk to reward ratio is 1:6. Stop loss at 5 pips. It's meant to be 6, but so you can see now. So you be actually be risking $3 to gain $18. Isn't that cool? You be risking just 1,800 to actually gain 18 times 600. That's like 1 8 times 6. That's around I think 10,800. You get, that's like, I think 10,800 or so, or thereabout. Yeah, 10,800 on this thing. So you can see that, it's cool. You're risking 1 8 to make 10 8, probably in a day, because it's possible for GPP USD to move 30 pips, 50 pips, 40 pips in a day. You get, so you can see how cool this is. Like, you already know that okay, if you are going to lose, you are going to be losing just $3. If you are going to win, you are going to be winning or gaining like $18. So let's say maybe you have a bigger amount that you are using to trade. Let's say those someone that has maybe like 200, maybe like $200 now. That was like over 100K, and the person is risking, maybe if person wants to risk $6 now, like 3% of his account. You get, or maybe $5. Let's say the person wants to risk $5. Or see, I'm coming. Position sizing. We go back. Okay, account balance 200. $5 is 2.5% of $200. So that's imagine you now have a tighter stop loss. Let's say your stop loss is like maybe just 4 pips. It's possible, very very possible. So like that's just 4 pips. Now calculate it. That your position sizing is 12,500. So you go here now. So that's 12,500. Amount to risk $5. So calculate. That's how much. So you are risking $5 to make $45. Now that's 1:9. So you are risking just 3,000, with 3,000 out of over 100,000 to make close to 25,000 naira, or like 27,000 naira. So you can imagine how it works. You need to ensure that you manage your risk well. You get, although being greedy can provide you more income, but imagine making $45 maybe 3 times in a week, twice in a week, or now maybe you're spreading it. Maybe you're now making $20 every day, coupled with indices that you can trade every day. You can imagine how much that is going to fetch you. You know, $20, $20, $10, $10 today. You get. So I'm not saying there are no losses, but you can imagine the concept now. Imagine that, okay, maybe you are trading, let's say you trade it 3 times, you make loss once, you lost $5, and then on this kind of trade now, you lost $5. You are risking $5 on each trade. You now lost $5. The second one you profited $45. The third one you profited maybe $30, or maybe $35. That was how much? $80. So 80 minus 5, that's still $75. So in this case, you're having like a success ratio of like 67%. That's 2 out of 3. You get now. So but the risk to reward matters. You get now. That's why I was saying something about that time that, okay, don't let me drag you back. So, but you understand the concept now. The stop loss matters, and it can actually fetch money if you have a tight one and then you have a higher risk to reward. Imagine now, even if you lost one trade, you are losing just $5, and then you are gaining maybe like $80, $50 or more. You get. So you understand the concept of what I'm trying to say. So there's a whole lot of opportunities in this market if you follow the right information and then you do it right. We will not lie to you that there are no losses, but what we try to do is to ensure profitability, that our gains are more than our losses. And how do we achieve this system? Is by ensuring we have a higher risk to, and we have a reward greater than our risk. Oftentimes we target at least 1:3. There are times we have up to 1:20. So for instance, and in this case, probably you are risking just 2 pips to actually get 40 pips. Let me show you how to actually get 40 pips. Imagine. So you can see now, with your $200, you're making probably $45 in a day, or like maybe like $80 in a week. You get. So it's highly possible if you follow instruction and then you're not greedy. There will always be opportunities every day, or almost every day. So it's just greediness you need to remove from you. And have a positive mindset too. So this is the video on how to use Forex calculator. So I'm going to see you in the next video. And services. Wait, okay, sorry. Let me see if there's anything here. Okay, there's nothing serious here. So that's basically what I use this app for, those two things. So I'll see you in the next video. And service says take care of yourselves.